All right, so in this video, we're going to be talking about how to identify the next draw on liquidity. So this is a very in-demand topic. I know a lot of you guys wanted a video on this, so today I'm going to be delivering that. So what I'm going to do is, how I'm going to approach this is, I'm going to kind of talk about what we had on our watch list this morning, all the stuff that I posted in my free Discord chat room. And by the way, if you're not in my free Discord chat room, where I provide a free daily watch list every single morning, where you can personally ask me questions, where you can consume my educational material for free. There's a link to that in the video description. Make sure you get in there. So what I'm going to do is I'm going to go over this price action, and I'm going to break it down. I'm going to break down my thought process. Like, I'm going to take you with me. When I first sit down at my desk, first things first in the morning, and I'm opening up my charts, what do I look for? Like, what is my thought process that I go through and I read price? How do I determine that draw on liquidity? That's what we're going to do here. So what I got on the chart right now is Euro USD. We're looking at a daily chart of Euro USD. So number one, when we look at this daily chart, here's what I need to ask. Here's what we need to ask ourselves. What is the higher time? What is the trend here? What is the market structure here? Well, the market structure is bullish. Why is it bullish? Because it's consistently putting in higher lows. It's consistently making new highs. Now, I'm going to give you a really simple tip here. A very simple tip to keep you aligned with the daily momentum, to keep you aligned, or a very easy way to determine what your bias is going to be for the day. Now, I actually have a video on the bias, on daily bias, and this is going to connect with the draw liquidity on that stuff as well, so don't worry. But I have a video on daily bias, but I'm going to kind of do a little bit of an update here, because that other video that I did on daily bias, it was more tailored to one of my personal models, but I know a lot of you don't trade that personal model. And if you're like trading solely Euro USD or the majors, for example, that other video that I had on daily bias, you may be waiting a long time, because yes, it's a good way to go about doing it, but you may not get that many setups at all, because it's a good environment, but it just doesn't happen if you're just looking at, it doesn't happen that often. It happens, but it doesn't happen as often as I know a lot of you would like if you're just simply watching the majors, right? So here's a very simple tip, and here's what I established right off the bat for Euro USD this morning. What happened yesterday? Ask yourself that question. What happened yesterday? So this is the day that we're currently trading on. Price is still working. This is within this candle. But yesterday, what happened? We had a very strong expansion to the upside yesterday. We had a very strong close higher yesterday. That tells you a lot. That tells you that, because that momentum falls through into the next day. Okay? And price is objective here is to do what? Whenever you're operating in a uptrend, whenever price is trending higher, its objective is to run previous day's highs consistently. That's its objective. That is that key liquidity pool that it's wanting to run out when it is operating in a bullish uptrend. Okay, remember that. It's to run previous day's highs. That's the key liquidity pool it's targeting. Because you can see in here, let's just follow my cursor. Right here, takes previous day's highs, boom, bullish expansion, runs previous day's highs, boom, has a little pullback, runs previous day's highs, boom, runs previous day's highs, boom. Like, its objective is to run previous day's highs, because that's a key liquidity pool. And when you're operating in this bullish uptrend, that's what it's doing. Now, here's a very simple tip that I'm going to give you to help you establish a bias coming to the day right away, to help you establish the direction that you want to be trading within. Okay? This is very good. It's a very clean cut way to give you that bias. Whenever price is in an upswing on the daily chart, meaning whenever you have a swing low that is formed, like for example, right here, say we got our lowest low in the middle and we got a higher low on the left, we got a higher low on the right. We have a confirmed swing low right here. After that third candle was formed right there and you're coming to a new day, you're looking for higher prices all the way until a swing high is formed. Really think about what I just told you. Whenever you have a swing low is formed, oh, and also let me include one more thing, and the market structure is bullish on the 4 hour. That's key as well. Whenever you have that, you are only looking for buys. Okay. Do I personally do this? No, I can find counter trend trades inside there as well. But I'm saying if you're a beginner and you're looking for like a really clean cut, easy way to always be, or a very easy way to establish a bias right off the bat, as soon as you come to the day, removes the thinking. I'm giving you a way to do that. I'm not saying you can't counter trend trade, do all that stuff, etc. Because I do it. Like I demonstrate that day in, day out in chat with banger plays after banger plays after banger plays that don't always match this criteria. But again, a lot of you aren't at the stage in your career as I am. And I'm giving you a very simple way, right? Baby steps. And this is a very good way to establish that bias coming into the day, which is, again, this is going to connect to the draw on liquidity as well. So it all connects, like the bias, the draw on liquidity, it all connects. That's why I'm talking about this, okay? So we already established that whenever you put in that swing low, your bias, once it's confirmed and it's closed, you need that candle to close. You're going to be looking for higher prices. Your bias is bullish until, pay very close attention, until a swing high is put in, and then you're stepping away from the market, or you can go to a different pair and look for something else. But for example, see how you get the swing low right here? On the 12th of December, you were only looking for buy setups. You already had that bias coming into the day. Now, that candle closes and you come into a new day on the 13th. Do you have a swing high put in? What is the market structure like? The market structure is bullish. Okay. Do you have a swing high? No. Well, guess what? Right away, you already have a bias coming into the day. You're bullish. You're looking for higher prices. It's that simple. And then it expands higher. Look at all that range in there, guys. Look at all that range that you can capitalize on that. Look at all that. And then we come to a new day. We come into the 14th of December. And this previous candle closes right here. We have that strong bullish expansion. So you have that storyline to go off of. Again, yet again, another day. So what's the storyline? Do we have what's the 4 hour market structure like? Is it bullish? It is. Check. Do you have a swing high put in on this daily chart? You don't. Well, you're still looking for higher prices then. So you come into the 14th and you have that storyline to go off of. There's no thinking that goes into it. Right away, you're able to establish that bias that you are looking for higher prices. There's no thinking. Right away, you already know what you're doing. The market structure is bullish. Okay. You have no swing high put in. Okay. I'm looking for higher prices. Boom. It ramps up. Comes into the 15th. What's the market structure? Bullish. Okay. I'm looking for higher prices. And is there a swing high put in yet? Nope. I'm still looking for higher prices. Now, it did move lower this day, and that's going to happen. And that's fine, because guess what? Perfection doesn't exist. You're not going to find something that's perfect. You're not going to find something that gets it correct every single day. But guess what? This is a way to get it correct more times than not. And what do you call that? An edge. That's what an edge is called. So you got the swing high right here, and then coming into the 18th, what would you be looking for at this point? You would just be sitting out. You'd be sitting out. Or if the market structure is bearish, then you can switch to looking for sells. Okay. But so if it's bearish and you get a swing high, then you would switch and you would start looking for selling opportunities. Okay. Then once a swing low is formed and the market structure is bullish on the 4 hour chart, you're going to be looking for buy setups. So you can see we end up getting our swing low, and then boom, it's ramping up, and it's been ramping up. So you can see right here, strong close, boom, and then it's continuously, each and every single day, it is doing what? It's running out previous day's highs, runs out previous day's highs, boom, runs out previous day's highs, boom, runs out previous day's highs, boom, and it's continuously doing this day after day after day, and it allows you to establish that bias. Okay. And what is the draw? The draw on liquidity is previous day's highs. See how it connects? So right away, we're establishing, that's the very first thing that I look for. The very first thing I look for here is I look at where that momentum is currently. Do we have a swing high? Are we still in an upswing? What key liquidity pools we're taking out? And is previous day's highs untapped or is it not, etc.? Because that's price's objective, is to take out, when it's operating in a bullish market structure, to take out previous day's highs continuously. So I noticed this. Coming to a new day, I saw we had this big bullish expansion yesterday. There's no swing high, and then I went to the 4 hour chart. So I noticed that. Okay. Now let's get a little bit deeper. Okay. So we got this move lower now, but first things first, this morning it was bullish. So let's go to replay because I want to take your attention off that for a second. Because look, this is what it looked like first things first this morning. Very bullish trend, right? Extremely bullish, extremely strong uptrend. And it's consistently putting in higher lows. It's consistently making new highs. Now, I see it coming up right here, and I see it's taking out buy side. Let's actually go to the 15-minute. So I'll get to my PC early London session here. And I see, actually, let me go, let me replay it a little bit farther back because I want to take it to this right here. So we saw this ramp up on Euro USD. Okay. It had equal highs up here beforehand that I noted. And I was talking about this in chat. I said, look forward to, after it sweeps these equal highs, what am I looking for next? I'm going to look forward to run sell stops. So let's find midnight. Right here's midnight. So I want you to think about everything that I've already told you thus far because it all connects. I gave you a very easy way to establish a bias coming into the day. And I gave you a very, right off the bat, we already understand that price is objective while operating in a bullish market structure is to run previous day's highs. Right away, I gave you that right there to go off of. And it's up to you whether you want to utilize that or not. But now we're going to get a little bit deeper into it. So something else that you have to consider is your session highs and lows. Okay, so you have Asian session, you have London session, you have New York session. Above these highs and lows, you have liquidity. Okay, and you can see right here is midnight. So we come into midnight, we get this little sell off right here. And where is Asian session lows? Right here is Asian session lows. So I want you to notice this first. There's Asian session lows right there. See this? Look at my cursor. That's Asian session lows. And we're starting here at midnight. Okay? We've already established that the trend is bullish. We've already established that we have previous day's highs serving as a draw. Right? And remember, when we are in a bullish trend, it's always going to want to take out, its objective is to take out previous day's highs. That's the very, very powerful draw on liquidity is previous day's highs. Okay? And then it comes down right here, right after midnight, it comes down and it takes out Asian session lows immediately. That's a liquidity pool that's taken. That's a key liquidity pool right away. That's taken right after midnight. You take sell side. Now, we're operating within a bullish market structure, guys. We're operating within a bullish market structure, and we just had a liquidity sweep. So now that it's taken that liquidity while operating within a bullish market structure, what's it going to want to do next? What does it want to do next? It wants to seek buy side. Think about it. It took liquidity right here. It took sell side liquidity. And you know what you do next? How do you actually capitalize on this though? Because some of you might be thinking, okay, but what if it just sells off and takes the next one, then it takes the next one, then it sells off and takes the next one, right? I know that's what you're thinking. A lot of you are thinking. Well, then you utilize a lower time frame shift. So we got this move immediately right here on Euro USD, and it took out Asian session lows. That's a key liquidity pool. And I believe I have videos. I think it's something called like key liquidity pools you need to be aware about or something like that on my channel. I talk about these key times you need to be aware of, okay? But right here, if you look at my cursor, the very bottom of that candle right there is Asian session lows. That's a key liquidity pool that we take out right here. And it's operating within a bullish trend. So now that we take that out, it's going to want to see buy side up above because it's bullish. The market structure is bullish. Okay? And remember, you've already established that your bias is going to be bullish today beforehand from what the daily chart was telling you. Go down to a lower time frame chart now. Did you have any type of shift in there? That's what you look for next, because you want price to show its hand to you. Okay? Now, it's not something that this is a shift in market structure, but it's not something that I'm really interested in. I'm sure if you went down to like a 3-minute or a 1 minute, you'd probably see your confirmation signal. But here's what we saw. There was midnight like we already established, and then it comes down right here after midnight, and it took out Asian session lows liquidity. That's a key liquidity pool it takes out while operating within a bullish trend, a bullish market structure. And we still, at this time, we still have previous day's highs serving as a draw. Remember, its objective is to run out previous day's highs consistently in a bullish market structure on the daily chart. And now we take out this liquidity. What do you look for next for that confirmation? You want to see a shift in market structure on your lower time frame. Because you can see what is coming down, Once it's trending lower and it's taking this liquidity right here, it's in a lower time frame bearish market structure that it's doing that. But overall, the trend is bullish. Don't forget, overall, the trend is bullish, but it's taking a key liquidity pool in this move lower. Wait for liquidity or you'll be the liquidity, right? We take the liquidity, and then you get a change in trend. See how it comes up and it cracks this swing high right here. Highest high in the middle, lower high on the left, lower high on the right. That's a swing high right there that it pushed up and it had a strong close above it. And then it pulls back. And guess what, guys? There's your shift. I like the fair value gap as well. Okay, but it's still a shift in market structure. This was a shift because it held up and it seeked what? It took Asian session lows. It had a lower time frame bullish shift, aka a change in trend, and it now wants to seek what? The next key liquidity pool. What is the next key liquidity pool, guys? What is the next key liquidity pool going to be? Well, yes, we have high day, but we have equal highs up above, and that's what I identified in chat beforehand. We had relative equal highs up above right here. See how we got this super clean level up above? Look how clean that is. Look how clean these highs. Let me actually just note it. Let's not be lazy and let's actually note it on there for you, right? So we can have the best learning experience. Look how clean that is. So we took out Asian session lows operating in a bullish market structure with a lower time frame trend after. That's the key thing, right? After taking that key liquidity pool. And then we simply look above and we identify the next key liquidity pool. We have equal highs up above. Trade idea. It's that simple. Now we're going to go a little bit deeper into it, of course. But that's a very good example of how to use liquidity and how to identify the draw. Think about all the work that I did beforehand, though. All right? Think about all the work that I did beforehand on the higher time frame chart. Like, I established that the daily chart is in bullish market structure. I established that previous day's highs is going to be serving as a draw because we're operating in a bullish market structure on the daily, and that high is still there. That's a very clear draw on liquidity. I already established all that beforehand. Okay. And I saw right after midnight, which is prime time for fake runs, Judas swings. I identified that fake run right after the bell that took liquidity. It took liquidity. It took Asian session low liquidity. So now that it's already taken that liquidity while operating in a bullish market structure at a prime time that we can anticipate fake runs while having previous day's highs untapped, it all connects. It takes one liquidity. It's like ping pong, back and forth, back and forth. It takes this and now it smacks it back to the other side to seek this liquidity up above. The key, but you have to have a firm understanding of market structure as well. That's the thing. Market structure and liquidity. It's a bullish trend. It's bullish market structure. It takes that liquidity. It seeks the next liquidity, these equal highs. Now, after we take these equal highs, it's a bullish trend, but it's taking out a big liquidity pool. It took out high day buy side, but it's also taking out previous day's highs at this point. That's a big liquidity pool. That is no small liquidity pool. That is a big, big liquidity pool right here. Okay. And as I talked about in chat, I was talking about it with my mentees. I said it's probably going to run these stops here next because now previous day's highs isn't a small level, and put yourself inside the mind frame now. Because here's what you got to do. This is what I do every single day. Put yourself inside the mind frame of a long who is in this play right now, who is trailing their position, who is looking for higher prices. And then on the other side of the coin, you also know that there's a lot of new buyers that are entering this play because it's breaking out. It's making new highs. Breakout buyers are all over this thing, guys, when it's making new highs like this. And where are they going to keep their stops? Where does basically everybody keep their fucking stop? Where does everybody keep their stop? Underneath the support. What is support? Support is an area where price has failed to move lower. Well, guess what? Right here is the absolute low. That was also where we had that liquidity run. Okay. That was also where we had the liquidity run here. That was the absolute low that price made. That is low of day before you had that push up to take out previous day's highs. Hello, big place to keep a stop. I mean, it's like a sit and duck right there. It took me no time to establish that that's going to be our draw because now it's taking out previous day's highs. Now it's taking out this liquidity up above. It swept that liquidity. We tested a 20 institutional price level, and now we have a big bucket of sell stops that are right here down below. Okay, and then if you go to like a 1 minute or 3 minute, of course, you'll have that same signature because price is fractal. You'll have the lower time frame shift off that liquidity, and you'll see it attack that next draw, which is right here. But then you get to kind of counter trend trading. And if you're a beginner, again, I recommend sticking with the rules that I gave you. I know a lot of people aren't, but I'm just trying to make it easier on you. I don't like operate like that. I counter trend trade as well, or I have a counter. I will be next year at least doing some counter trend trading, but I also trade with a trend. But the easiest money is with trading with the overall trend. Those are going to be your highest probability plays, is when you have when you're aligned with the trend. Okay. I'm not saying you can't make money counter trend trading. You can, but if you're a beginner, why not make it easier on yourself, right? Why not go with the trend? Take those easiest plays. And that's what I'm presenting with you, and not giving you that option. Like right away in this video wasn't about daily bias, but it kind of connects with liquidity, etc. So I'll put it just in one video. But I gave you a very simple way to establish that bias right off the bat. I gave you a very simple way to have that direction. So not to get too sidetracked here, we took out previous day's highs. That's a key liquidity pool. Okay, if you understand liquidity, you understand previous day's highs is a big liquidity pool, a huge liquidity pool. Yes, it's overall bullish, but of course you take out something like that, you can expect a retracement in the near future. And where's it going to retrace? Well, to the next draw. Where's the next draw? Low of day, because that is a place where stops are residing. So we have low of day right there. That's what I want to see it come down and take next. We get a lower time frame shift. If you just go in there and study it, you'll see it gets that shift, and then it does what? After taking that liquidity, we get the shift, and then it comes down and it attacks low of day sell some liquidity, because we have stops right there. Okay, so it attacks that big liquidity pool being low of day. Now, this is where I'm hunting for a buy setup, and I plugged it in my free Discord chat. Again, link in the video description if you want to join that free Discord chat room. We tag these stops right here, and now I'm on alert for a buy setup. I'm looking for a lower time frame shift, because think, we took that liquidity up above, but now we're taking out low of day sell stops. We're taking out low of day liquidity. That was our draw beforehand, because we took out previous day's highs. We took out that liquidity. But after we take out previous day's highs, which is a big liquidity pool, this was our draw. We came down and we drew down into that level. But now that liquidity is done with. It's gone. And remember, we are operating within a bullish market structure. We're operating within a bullish market structure. And now we're taking this liquidity right here. So if it can provide me with a lower time frame change in trend now, I can look for it to seek the next liquidity pool. But here's the key thing, and I don't want you to miss this point. The confirmation is what you want to look for. Because I didn't know if it was going to find support off this level right here, or if it was going to find support off this level down here. All right, I don't got a crystal ball. I can't tell you the future. That's why I react. I react to the signatures that is displayed on the chart. I don't predict which level it's going to do it off of. I react based on whenever I get that change in trend. And then after you get that change in trend, you can look for that next draw to be taken. See what I'm getting at here? We took out low of day sell side. We already knew that was our draw. Okay, we got the lower time frame bearish change in trend up here. It came down and it took out this draw on liquidity being low of day now. We understand that low of day is a key liquidity pool. We understand that the market structure is bullish. And now if we can identify that change in trend right after taking this liquidity, what's the next key liquidity pool going to be after that change in trend? Where? It's going to be high of day. Where else? Well, I mean, what else do you got? You have high of day. That's the next key liquidity pool right here. It already took out these highs, so this is the new high right here. It pulls back, it takes low of day. Look for the lower time frame change in trend. So what do we have right here? When it's making its move lower to attack this sell side, it's bearish. It just put in a short-term high right here. Look at this. Highest high in the middle, lower high on the left, lower high on the right. It comes down and it takes that low, creates a short-term high. After taking our key liquidity pool, now we want to see a change in trend. If it can't give a change in trend, well then the focus, if it can't give the change in trend and respect this level, then of course it's going to want to draw down to this level right here. You have to listen to price though. You have to let price unfold. You have to, because price will tell you what it wants to do. It'll show you what it wants to do. You just got to listen. So that's the questions you got to ask yourself next is it respecting this liquidity pool as a level? Because it came down, it took it. Is it going to respect it as support now? And it'll tell you if it wants to. And if it wants to respect it, well, guess what? It'll have that shift in market structure, that high probability shift. If it doesn't, and it does, like say, it ends up closing like beneath this level right here, and it's showing a lot of failure to hold above it, well, then it's clearly going to want to draw to that next key liquidity pool below. And that'll be your next draw then. But right now, we're respecting it. It came down and it took that liquidity pool and it's respecting it. It's still above it. It wicked, had a very wicky move right here, which is a good sign. What happens next? You get a push up. Boom. Strong close. That's a very bullish signature. right here. Boom. You get a fair value gap confirmation. That's what I want to see. And again, I plug this in chat for you guys beforehand. No hindsight. Everything I do is beforehand in the free Discord chat. And we were targeting this high right here because I understood that we already took this liquidity now. So now the next draw is going to be this high right here because we already took this one right here. We already took out that liquidity. We got a change in trend. So then I simply look up, where's the next draw? Where's the next key liquidity pool? It's high of day, clearly. That's the next key liquidity pool is high of day. So again, we got the high probability shift. High probability, how do we establish that it's a high probability shift in market structure? Well, we need to see the strong candle close above the short-term high. Again, we have our swing high right here. Look at this big strong candle close at 340. Look how that closed above that short-term high. That's a strong candle close, number one. We need the fair value gap confirmation as well. 3 candles make the fair value gap. And again, I have videos on fair value gaps. Just search my channel. You will see them. We have 1, 2, 3. 3 candles make the fair value gap. The top of that first candle and the bottom of that third candle do not touch, leaving an imbalance, which in simplest terms means the buying was extreme in here. All right. Institutional money steps in. Big money steps in. They can't hide, right? They can't hide. And it's shown in the price action right here with that shift. That's them showing their hand. Right after, pay very close attention, right after taking that liquidity pool right here. It takes that liquidity, it runs those stops, shift in market structure, change in trend. Look up, where's the next key liquidity pool? Right here. It's that simple. That's how you establish where the next draw is. But again, it goes back to, you have to have a firm understanding of market structure. You need to know what a market structure shift looks like. And you also got to know what your key liquidity pools are, obviously. What are they? Well, in this video, we talked about, yes, there's previous days highs and previous days lows are key liquidity pools. And you also need to be aware of your session lows and highs as well. You need to be aware of where Asian session highs and lows are. You need to be aware of New York. You need to be aware of London. And also on the higher time frame, previous weeks highs and lows are key liquidity pools. Previous months highs and lows are key liquidity pools. So you can see that's what you want to work with. I gave you the option with the daily. Like I said, if you're operating in a daily bullish market structure, previous day's highs is always going to be where it's going to want to try to run. If it's in a bullish market structure, its objective is to continue to run previous day's highs day after day after day after day. That's going to be its objective. Okay. And if it's a bearish market structure, well, then obviously you just reverse it. It's going to run previous day's lows day after day after day after day. Okay. And that's what you're going to see. That's just a very clean cut, simple way to approach it. And again, I give you a way to always have your bias aligned with that. A very simple way to do it is to just trade with that upswing. If you get a swing high, well, then you would just get out of the marketplace and wait for the swing low and the market structure to be aligned again. Okay. And once you get a little bit more advanced, you can kind of do like I do, and you'll be able to read the counter trend trades a lot easier as well. But again, we need to take baby steps here, and this is the absolute easiest way to because you'll always be aligned with the higher time frame trend. So you're kind of putting yourself with that tide, and you don't got to be as precise as you do with counter trend trading. Counter trend trading is more of an advanced game. Okay. And if you're a beginner, well, then why not make it as easy as you can? Because if you're a beginner, you're going to be the worst that you've ever been in your entire career. So why not make it easier on yourself and trade with the trend, right? And that's what I'm showing you right here. And this was something that was aligned with the trend, okay? So you can see we took this liquidity pool right here in London, right here being low of day. Low of day is a key liquidity pool. We got a swing low right here. Boom. We get a change in trend right here. A high probability change in trend. That's key as well. And then we look up, next key liquidity pool is that. Takes it. It's done with, right? So that was right off the bat. That's what we saw here. That was a very clean trade. Posted it all in chat. Now after we clean this high right here, here's pay very close attention to this as well, because this is it's a very key detail that you want to pay attention to. Now we ran up throughout London session. Like we had that big strong move in London session, but guess what? What are we approaching now? As price is trading and it's gyrating right here, what is it approaching? Well, we're about to enter New York session. New York session is 8 o'clock. So New York session, it's going to give you a couple different scenarios. It's either going to give you a Typically, at least, it's either going to give you that retracement opportunity to piggyback the momentum that is set from London to look for that continuation higher. That's one option. The other option is it's going to have a complete reversal on the trend, and it's going to seek liquidity below. That's what it did today. And that's what I was anticipating. And that's what I told my mentees on mic. It's going to likely have a reversal lower to do what? May I remind you, what did we say at the very beginning, guys? What I said at the very beginning, we had this imbalance down here that was serving as a draw, and it's completely rebalanced at this point. But we had this imbalance serving as a draw on liquidity. We were in a higher time frame premium, may I remind you, because this push up right here, if you look to the left, where my cursor is moving, we have our highest high in the middle, we have a lower high on the right, we have a lower high on the left. That makes that a swing high right there. And we came up and we took that swing high right there. That's higher time frame buy side liquidity that we took out. And it's also previous day's highs, right? So we took out that liquidity while operating in a bullish trend. And now it's done this in London session. I want you to pay very close attention. It's done this in London session. It sweep that liquidity, that higher time frame liquidity in London session. And you have an imbalance down below serving as a draw. And now what do we have here? We're about to come into New York session. And New York session, what did I tell you a moment ago? It's either going to give you an opportunity to get on board the trend to piggyback it higher, but where's it going to go? It already took out the liquidity. It already took out higher time frame liquidity in London. We got to draw liquidity down below. So does it really make sense? Because price is going to move in the direction of least resistance. Does it really make sense to move higher, or does it make more sense for it to have a reversal lower? Because it's in a deep, deep premium, meaning it's already expensive, and it's taking out higher time frame buy side. It's got to imbalance down below. So the more likely scenario in New York, because New York's either going to do two of these, is to have that reversal because it's already taken out this liquidity. Again, we're fully aware of the liquidity it's taken out right here. That's why I said on mic, that's why I posted in chat that it's probably going to have a complete reversal come New York to take out this liquidity down here, because we have this imbalance down here. We have these stops down here. So I'm looking for a complete reversal. I didn't think that this is just going to find support right here and ramp back up. Why would it? Why would it? It already took out previous day's highs right here, which is that key liquidity pool that we were looking for it to take beforehand, like we already established. We already took that out. We have a drawn liquidity down below. So it's probably going to have a complete reversal because New York is prime time for that. If that draw is already taken right here beforehand, which was previous day's highs. And also we had the drawn liquidity down below to assist it. Drops off a cliff. No surprise. So that's what we were looking at. That's what happened. That's what we were anticipating. And again, talked about it all on chat, like beforehand, no hindsight, as I always do. Everything is called beforehand. And that was how I came to that conclusion. So see what I'm doing here? I'm just kind of bringing you through my thought process on this today. My entire thought process from start to finish. Like when I first sat down this morning, pulled up my charts, this was my thought process. That's how I approached it. Okay. Now, what about now? Well, we got this big flush right here. All right. And the higher time frame chart overall is still bullish, but want you to notice this. Like, look at how this candle closed. Now, we rebalanced this price action completely, but I want you to notice a few things here. Notice how this pullback right here didn't take out any higher time frame sell side. And I want you to also notice how it closed and how it engulfed this entire range up here. Like, that's a very bearish signature. That's a very strong close. And each candle, may I remind you, each candle tells you a story. So we already took out higher time frame buy side, and now we get this big rug pull coming into New York session. And let's go back to the 1 hour here. What is the storyline here on this 1 hour chart? Is this a stop run? What you see right here on the 1 hour chart that I have on this posted right here, or what you got in front of you, is that a stop run or is that a market structure shift? That's a market structure shift. Why? Because we have the signature for a market structure shift. What are the signatures for, and I've talked about this in videos as well. What is the signature for a high probability market structure shift? You want to see it take liquidity. Did it take liquidity? Look right here. We have our highest high in the middle. We have a lower high on the right. We have a lower high on the left. That's higher time frame buy side liquidity that we pushed up and we took. So yes, we took liquidity. Did we have a shift? Did we have the fair value gap confirmation on the shift? Right here, boom. 1, 2, 3, nothing but body in there, giving the fair value gap. Did you give a strong close? Right there, strong close beneath the levels. That's everything for a high probability shift. And also I want you to notice this key detail as well. because this is important for understanding that this is going to be your draw going forward. We had relative equal lows down below. What we understand about relative equal lows is, well, typically price does not leave areas super clean like that for very long. We understand in the near future, it's going to want to draw to take out those lows because it's too clean. It's not going to leave it like that. So think about everything that I've already told you now. We've taken out higher time frame buy side. We took out previous day's highs. We have a high probability shift in market structure with fair value gap confirmation with a strong close. We have relative equal lows down below, and now we're retracing higher. Because this push lower right here, it took out external range liquidity. It took out these lows that was outside of the range, aka external, outside the range. It was external range liquidity that this push lower took out. But now it creates this imbalance, aka internal range liquidity. And then you can see it pops up, it rebalances that internal range liquidity next. But remember, we've already taken out higher time frame buy side. We have equal lows down below. We have a confirmed shift. So now that we have rebalanced this internal range liquidity, where's it going to go next? Is it going to go higher? Why would it go higher? It already took out higher time frame buy side. It already took out higher time frame buy side. It had a lower time frame, high probability shift. It has equal lows down below. Where is the least risk? Because price, remember this, price moves in the direction of least resistance. Where's the least resistance going to be? Is it going to be higher? Why would it be higher? It already took out that liquidity. Yeah, it's overall bullish, but you got to consider all the other signatures that we got to play. No, it's going to move lower. And that's, as I posted it in chat in the Forex analysis section. And that's exactly what happened. It rebalanced that internal range liquidity and it seeked the external range liquidity below. And now we're operating in that downtrend. Okay, so that's what it's all about, guys. That is a really good example of how to determine the draw. So one last time here, though, and again, if you need to, watch this video several times, pull up your own charts and follow along with me, and look at some of your other pairs as well, and it'll start to click. It'll start to make sense. But you need to have a very firm understanding of market structure. You need to be aware of what your key liquidity pools are, and then you also need to look for your confirmation signals. You need to look for your shift in market structure after you take out a key liquidity pool as well. That's another thing. So right here again, one last time, we established beforehand that our bias is going to be bullish because it's currently in an upswing on the daily chart. There's no swing high and the 4-hour market structure is bullish. So right away we can establish that the momentum essentially is to the upside. And right as we come into right after midnight, first things first, we have a move lower. But remember, we have previous day's highs untapped right here. Okay, that's serving as a draw. And the very first thing that we do is we take out a key liquidity pool. So, I mean, right away, though, we already know we got to draw liquidity right there. Like, we already established that draw beforehand. It took no work to do that. And that's why I gave you that strategy to go about finding that bias, because it's a very simple way of finding the draw liquidity right away. Very easy, very simple way to go about finding the draw right away. But now, what happens next is we want to see it take liquidity. That's important. You want to see it take liquidity. It goes back to one of my most well-known quotes is, wait for liquidity or you'll be the liquidity. Well, where's the liquidity? Because that's what we need to do first. We need to identify the liquidity. Well, we have Asian session lows right here. See how it came down right after midnight and it took Asian session lows? We took that liquidity. We took that liquidity while operating in a bullish trend. And then, what do I look for next? Well, I look for a change in trend, because I actually want to see that there's institutional money starting to step in to send this thing higher, aka confirmation. It has the change in trend right here. It has the cracks that short-term high, strong close. Of course, I like the fair value gap as well. But again, just for the sake of this example, because this was a shift as well. Now you get a change in trend after taking Asian session lows. You've taken that liquidity. Since it's already taken that liquidity, of course, it wants to seek what? It wants to seek buy side up above. Why would it move lower? Why would it move lower? It already took out sell side. It already took out that liquidity. It has a complete change in trend. So now the momentum essentially is to the upside. You're just piggybacking that momentum now. It already took this liquidity. It's going to move in the direction of least resistance. And you have this previous day's highs, which is like serving as a magnet. Think of it like that, like a magnet. You have that big, strong magnet. You're already trading with the overall trend, the higher time frame trend. So you're trading with the area of least resistance. You're flowing with the tide. And now you have this magnet up above, and it just gravitates to it and takes it out. Then you take out that liquidity right there, has a lower time frame change in trend after doing so. If you go to the lower time frame, you'll see it. And then it comes down and it takes out low day sell side. Why? Because we have a big bucket of sell stops right here for longs that are trailing their positions. right away after you see that lower time frame change in trend after taking out previous day's highs, you take out that liquidity pool, just like you took out Asian session lows right here, and then you saw the change in trend and you wanted to see it take previous day's highs. After you take out previous day's highs and you get a lower time frame change in trend, you're looking for it to take out this liquidity right here. And then it does that. It takes out the liquidity right there. Now you're taking out low of day sell side while operating in a bullish market structure. What are you looking for next? You're looking for another lower time frame shift. It has a lower time frame shift on the 5-minute right here. See how it cracked that short-term high, fair value gap, the whole deal, boom. Just like that, you're looking for it to take out this high now. It does it. It takes out that high. And that was that. And then, of course, later on, you get another lower time frame shift. And again, we're coming to New York, which is prime time for reversal. As I was saying earlier, it's either going to give you a retracement or it's going to have a complete reversal. And we had the lower time frame change in trend. It's bearish. It's consistently moving lower. I can anticipate it wants to come down and take out these stops now. Coming to New York, that's exactly what happened. And then you get a 1-hour shift with your equal lows down below, premium, seeks internal range liquidity, sells off. Price is fractal at the end of the day, right? So that is like a prime example of how to establish your draw on liquidity. It's the same exact thought process on every single play. Is it going to look exactly like this? Of course not. But as I said, pull up your charts, study your charts, journal your charts, and consider what I told you in this lesson. And pull up your own charts and really study it. Be fully aware of your key liquidity pools. Have a firm understanding of market structure. Know how to identify a shift in market structure as well. And yeah, I mean, that's the key, guys. It's very simple stuff. It's very simple stuff. And if you keep at it and you really practice what I taught you in this video, it'll start to click. It'll start to click and you'll realize that you'll see how simple it is, right? So hopefully you enjoyed this video. If you did, leave a like, subscribe to the channel. I'll catch you later.